Next, we are going to explore a different type of chart pattern, the gap chart pattern. So unlike other patterns which are a result of either a transition of investor sentiment or consolidation, the gap pattern is a behavior pattern where we have a surge of sentiment. And this pattern gives us an excellent idea of where to expect a stock to be heading. We will explore and focus on different types of gaps, but to start off, let's get into the basics of what gaps are. A gap happens when the opening price is different than previous day's close price. The difference is called a gap. So if we look here, this is a filled gap, and then this is a real gap. So I could literally draw a line through, and the wicks will not be touching. It's a sudden change in investor sentiment while markets are closed, after hour news or after hour trading influx of overnight orders happen. So think of a CEO stepping down or a big news catalyst, something like an earnings report. Something major came out, and now we have sudden investor sentiment. So let's take a look at filled versus not filled gaps. And majority of gaps will actually get filled during the daytime. So here we have a not filled gap, and then here we have a filled gap. So take a look here. Strong gap opening, but then it got filled during the day. And gaps that get filled become irrelevant and not reliable, therefore we just completely disregard them. So it's very important if gaps do not get filled. It's a different classification for gaps not fill. And with that being said, let's explore into the most popular and major gaps.